Hi fools, welcome to another video from the Motley Fool. I'm Owen Benelak. Now Saga has been one of the highest profile flotations in the London stock market recently, probably rivaling the Royal Mail for newspaper coverage. And the shares have begun conditional trading. This is where banks and brokers basically get to trade the shares for you and I, pretty much to kind of figure out what the price should be so there's not some crazy surge on the first day. What they figured out is that the price is going to be about 185 pence at the moment. That is well down on the potential 245p that was touted. The range 185p, 245p, we're at the bottom of the range. That is by any measure not particularly great. And it values the company at about £2.1 billion, which is a lot less than some were expecting. It means the company, in fact, is going to issue £550 million worth of new shares, but the private equity backers who've already got shares in Saga have pretty much put on ice their plans to offload some of their shares. And that's potentially bad news, because it could mean that in the future these guys will come back to the market, try and sell their shares. So people are going to fear that there's an overhang depressing the value of the price because they know that these guys are waiting in the wings to shovel their shares overboard. It's a curious situation because the demand for the IPO was actually quite strong among Saga's loyal customers. These are the over 50s who seem to go around the world on cruises and buying insurance from Saga. Very loyal bunch, it appears. The offer was 3 times oversubscribed, and that means that people who tried to buy the shares have in many cases seen their requested allocations scaled back. So the company says that overall it works out as about 2/3 of customers get about 50% of what they asked for. If you ask for the minimum of £1,000 worth, you pretty much get your full lot. But the more you ask for, the more it's scaled back. So someone who asks for £40,000 worth of shares might only get, say, £2,500. And I think that's probably the hidden silver lining in all this, is that if you really wanted to take a big stake of Saga, in Saga, you've got your chance. Because if the share's now listed at 185p, firstly you're paying, what seems to be a more reasonable price than some were talking about. Secondly, you can obviously buy as many as the open market has available, which for most of us will mean as many as we want. So if the shares do price at this lower end of the range when they start trading, when they go beyond this conditional trade stage to full trading, you can get all the Saga shares you want. On the other hand, if you were buying them because you thought there'd be a Royal Mail pop, A, I think you were optimistic, and B, it's not really good news that the shares are priced quite low.